Hi there everybody, it's Chris here from Serene Education with the 4 majors and update for the first week of February 2015. Going to be looking at the 4 majors as mentioned, starting with Euro against US dollar on the monthly. Let's have a look and see what's happened the prior month. Let's have a look and see what happened in January in fact. So looking at the last candle here on the chart, you can quite clearly see how much momentum or negative momentum we actually saw playing out through January after the close low in December. Mentioned at the start of January the significance of that bearish candle that we saw in December, and you can see the clear outcome of what are as we headed into January. In fact, mentioned to you in December, there were a number of fundamental news announcements that were made public that quantitative easing was likely to be a major factor for the ECB, and that clearly played out this month, January. In fact, as we heard that the ECB was going to start to buy government bonds, start the asset purchasing plan, 1 trillion euros. That equates to around about 50 billion euros a month from March right through to the end of the program, around about 2016 in fact. And then we also had the word that the Greeks were voting, and the outcome of that was we saw a new government being voted in, which had another negative impact on the current things. And you can see that we actually saw a drop around about 8.4%. That's a major candle compared to what we've seen over the years, and we've seen a lot of negativity that's been playing out through most of 2014. So that momentum really taking hold, and you can see the outcome that we've seen. So where has price fallen to? And you can see that taking the overall long-term bias on here, you can see that the monthly fib level here at 61.8 at 111926 and change. You can see that clearly being a viable target for January, and very much has been the case. And we saw an excess of about 900 pips total number of pips available on the table for January, and clearly that has been taken. You can see the actual indicator box over here primarily telling us we should be looking for further negativity. In the actual setup, the template setup tells us quite clearly red arrow, red candles, the RMO below, OSMO below, and clearly visibly red. Should be still looking for negative sentiment to carry on. So now we look at the first week of a new month, and we have to look at the actual fundamentals now. So it gives us an idea of what we can expect for the first week of February, and being a new month, the first major one that we've got to worry about being the first week of a new month is non-farm payroll, the US data. So this Friday we have non-farm payroll, therefore we can expect a lot of data from Wednesday through to the coming Friday. So anybody who's looking to trade between Wednesday and Friday this week, please be vigilant, as there's a lot of data that's made available between Wednesday and Friday. Particularly Thursday we have a lot of interest rates announcements. I think we have Australian interest rates announcements on Tuesday. So if you're trading the Aussie against any crosses, please be vigilant for that particular announcement. We also have the UK interest rates announcements and the their quantitative easing program update on Thursday, and then we have the important non-farm payroll figures on Friday. So please be vigilant. Look at the upcoming data for this month, guys. Get an understanding of the importance of that data and how that can actually reflect on price action going forward, depending on which pairs you're trading. So looking down at the weekly now, we're going to expect that the price has actually consolidated. If I just zoom in so you guys can see price action, you'll notice that we actually traded below the monthly fib level for a period of time. However, by the close of Friday evening, you can see that price had actually pulled back. A portion of people taking profit as we headed into this monthly fib level here, and clearly prices closed above it. So if you're looking for further negativity or to be selling with the actual trend at the moment now, we would want to see prices making new lows. So if we go down to the weekly time frame, straight away we get a sell signal on the chart. But you can notice that looking at the prior week, the week before last week, you'll notice that price actually fell to trading low in that. So we're still looking at price being consolidative as we headed into the monthly fib level, and you can see that we actually had very similar to a bullish Arami, apologies, candlestick here, where the bias is actually closed slightly higher, not made any new lows through most of last week. In fact, we saw prices trading higher for a particular part of last week, however closing back to the downside. So forming this little candlestick at the bottom, you can see there's a bit of wick to the upside, but most importantly, you can see the close is still above the monthly fib level. So when we drop down to the daily time frame now, ideally what we want to see is price getting back below that monthly fib level, because as price continues to level out above the monthly fib, then we'd like to see further bias creeping and bullish bias. That being said, creeping into this, and then we could see price pulling back further through February, in fact. So if we are to see any further negativity for the euro against US dollar, we would want to see price trading with long-term trend, which in this case is still very much negative. Therefore, we would need to see a bearish engulfing candle close lower than the current support level over here, which would indicate a further swing low with long-term trend. And if I just pan out here, you can see the overall trend on this particular pair, very negative. The candlestick's very much negative. We do have a blue arrow. The close on Friday, we saw a blue arrow. However, the candlestick is still very much negative. The OSMA has just moved higher. So we have a 2 cancels 2. So 2 negatives and 2 positives cancel each other out. Ideally, we'd like to see the 4-part requirement, i.e. arrow, candlestick, RMO, and OSMA working together with the long-term bias. Clearly not the case here. We are seeing consolidation, but not seeing any new highs. Ideally, we are to see any further selling opportunities for euro against US dollar in a negative trend. Need to see price trending back below that 61.8 level to constitute any further opportunities to the downside. Ideally, a close below the prior week here at roughly about the 11073 mark would be a better layout. So looking for euro against US dollar first part of the new month, look to see price making new lows, swing lows in fact, and getting below that monthly fib level. Sterling, here again, I clearly see we've also seen a lot of negativity for this month as we saw further negative sentiment or data coming out of Eurozone. And what price is doing right now is trading below that monthly fib level, but you can see there's also a consolidation level that happened through most of 2013 in fact. And if you took the body lows of those, what's that, 1, 2, 3, 4, 5, 6, 7 months, you'll notice that price is trading slightly below that level at 151,665. You can see that we had a lot of wicks on the prior months. Okay, so we saw prices trading through those months to the downside. However, by the end of those months, price had actually closed higher. Okay, and therefore forming a nice sort of strong support level. Here again, you can quite clearly see that in this particular case, we've actually seen price trading lower and also closing lower. So a bit more negative sentiment this time around. So therefore, that would particularly indicate that we should be still looking for further negative bias for sterling against US dollar. If you look at the indicator box here on the hard right edge, you can quite clearly see that the long-term sentiment here, monthly, weekly, daily, 4 in particular, is very much negative, and the R squared is complementing that selling. However, you can see at the close of last week, we saw a positive coming into the market and clearly profit taking place, and hence the reason why we have blue arrows on the intraday sentiment. So if we drop down to the weekly, straight again we get a selling signal. You can see the overall trend for the weekly still very much negative. You can see that on the indicator chart here, everything looking negative in the R squared complementing that selling. We are trading below the monthly fib level. We are trading below that consolidation support through 2013, which was a major support level as well. You can see that the prior week was a candle that closed lower. However, I mentioned that if we were to see any further selling, we would want to see last week, in fact, actually trading low on any daily time frames. That subsequently failed to occur. And you can quite clearly see we didn't see any further lows or the close the prior week Friday. We didn't see Monday, Tuesday, Wednesday of last week closing lower than that. So therefore not giving us a valid selling entry with long-term sentiment, which would be to the downside. So looking down at the daily, we would ideally like to see the prior week's low, which was the Friday close, in fact, being breached for further selling opportunities in what is very much a negative trend. You can see the last couple of weeks, in fact, most of January, price for sterling has pretty much gone sideways. We've seen a bit of negative sentiment. However, the overall bias of here is one of consolidation or ranging. Okay, we want to trade strong trends. Here, it's not really much moving anywhere. So a lot of risk on the table as price has not been able to find a lot of liquidity to actually trade further to the downside. So ideally what we want to do is set particular targets. In this case, got to see price trading back below the prior week's low. Here I'd run about that 1490 and change. before we can contemplate looking for further negativity back down towards the 100% extension, which is down here at 1349 and change to the downside, which is in excess of, let me just tell you, around 1400 pips in fact. So there's more than enough on the table to see further return on time invested. So just got to be patient, wait for price to close below that 149, and then look to see all the indicators confirming that negativity before we take any opportunities further south. Moving on to the US dollar Swiss franc, we heard and we saw the outcome of what happened after the Swiss franc unpegged its currency, and that played out in the US dollar Swiss franc, and you can see what happened on the last month, January. A lot of movement for this particular pair. We saw in excess from the current highs to the low of that candle. We saw it in excess of 1965 odd pips of movement in one day, guys. Okay, 1 hour, very, very volatile. And if you actually look at it, if I just draw a shape over here, you can take the current high of that candle straight back and to the current low. You can see how much consolidation or how much movement we saw. We saw pretty much all of the last 3 years of consolidation being taken out on one particular day. Very, very volatile. However, since then, you'll notice that we've seen a pullback. You look at the candlestick formation on this particular pair, you can see that price has actually pulled back more than 50% of the entire range of that candle. If I just take the fib retracement level here, take the current high to the current low, you'll see that price is just trading slightly lower than 50%. So almost a 50% pullback of the overall extension of that monthly candle. So a very negative lead, but you can see how much consolidation has been taking place. This price has pretty much tried to claw back a bit of that negativity. So when we look down to the weekly time frame, here we go, you can see quite clearly the actual bias of that weekly time frame 3 weeks ago, how negative it was. But you can see the price failed to make any new lows, failed to break the low of the week that we saw 3 weeks ago, apologies, here at the 82.96 level, and subsequently since then price has actually pulled back. Looking at the indicator chart, you can see it's all over the place, bit of negative and positive all over, but you can see what's happened now. Price is still very much trading within a consolidative range. If I go back to the monthly time frame, you can see prices failed to make any new lows and failed to make any new highs. So trading back within this consolidative range, more risk on the table because of that, intraday or daily if you're looking at that time frame. So be vigilant on that. I don't know if the US dollar Swiss franc is something that we should be looking at the time frame, unless we actually saw a continuation with negative sentiment that we saw prior. Last bit of the day, I'm going to just talk about the US dollar Japanese yen on the monthly. I did mention we ended off 2014 with an indecisive candle at a major monthly fib level here at the 61.8 level, 120. Nice round number there again. Psychologically, traders like round numbers, and you can see the hesitation we saw in December. So even though price actually closed higher than November, there was still very much an indecisive range or indecisive month, as both the buyers and sellers could not come to an agreement. So we should have expected some sort of indecision going into January. We would have liked to seen a confirmation candle from January, and what we got was a bearish engulfing candle at a major support and resistance line. You can see that price for a period of time through the start of the January was trading higher than 61.8, but failed to actually take that momentum forward on the weekly and daily in particular and to build higher. And so subsequently we saw further selling sentiment creeping into the US dollar against the yen, and we've seen a closed lower. So when we drop down to the weekly time frame, there again you can quite clearly see bullish bias through the end of November. However, through December, clearly the brakes being applied here. We had a tweezer top formation, a bearish engulfing candle in December. Failed to see any further continuation lower on the outcome of that bearish engulfing candle. A nice support level was forged. Prices reattempted the 61.8, but once you got above it, and we wanted to see price building as we headed into January, that failed to materialize as a failure to find liquidity to drive the market up, met the traders, and subsequently we've seen further negativity playing out. We have seen price trading back below the current or the November, December lows, support level lows, and you can see we've seen a second consecutive week now of indecision. Okay, so clearly indecisiveness, and you can see that the actual candle ranges are the bottom end of those candles, so negativity, But ideally, if we are to see these as genuine selling indication, then we want to see a bearish engulfing candle to confirm that as negativity, and then we could trade to the downside. You can see the long-term trend has been, or still is, to the upside, but you can see a lot of negativity now creeping into the shorter term time frames for the US dollar Japanese yen. And if we don't see any new highs, then this negativity is really going to start taking hold of the pair and then driving her lower. So as it stands at the moment now, we're not seeing any new highs. So here again, the candlesticks on the weekly though are still showing positiveness, and we have a red arrow. So hesitation, indecisiveness is part of this. Ideally, we'd like to see this week giving us some sort of directional candle. This is the US dollar Japanese yen. We do have non-farm payroll figures for the US market, thereby being a US cross. Are we going to see this Friday giving us our sentiment candle, and then we could actually trade the second week of February with some sort of directional? So therefore, again, we'd like to see what happens at the end of this week to give us confirmation going into the remainder of February as an outlook of where we should put in our bets. Okay, so that's it for the analysis for the four majors for the first week of February. Please be vigilant. There's a lot of data out this week, guys. I've mentioned at the start of the video. I'm going to mention it at the close of the video. Got to always be well aware of what's coming out before you actually look at the charts. Be aware of what's coming out fundamentally, because it will have a say of what price action does going forward. You don't want to be trading on the wrong end of any bad data or positive data if you're going in the opposite direction. Other than that, I hope you have a fantastic week. Keep it simple. Please follow the rules of any template you are trading. Please back it up with sound money management rules and keep it as simple as possible. Okay, I'm going to leave you with that. Hope you have a fantastic week ahead, and I'll see you guys the following week. Until then, you guys trade serenely.